We join with the management just shortly. Ajay Goel, the Chief Financial Officer at Vedanta, and of course Arun Misra as well, the Executive Director, to try and figure out how their earnings performance has been. It is a mixed quarter that we've seen from Vedanta this time around. But gentlemen, great to have you today on ET Now. Ajay, if I could start off with you first, let's talk about the numbers. And before that, let me talk about the broader picture at play. Now that the demerger is behind us, how should investors think of value unlocking and value creation within each of your independent entities?
It is our first interaction post-demerger. And if you look at on a combined basis, all the 5 companies, the valuation over the last quarter on a combined basis has gone up by almost 71,000 crores. So Vedanta demerger, in fact, did create lots of valuation. Now, Vedanta demerger is just the initiation, not the culmination of more corporate restructuring. You may have noted, we also announced now demerging all the assets in terms of real estate. What we intend to do, we want to put all land parcels across the country into one company and demerge. And even that should lead, in our estimation, a value unlock of almost 3 billion. If I speak of broadly current year outlook, as you mentioned, we are looking at an EBITDA of 10 billion. And with that, Vedanta can fund its next growth phase. At the same time, deliver the balance sheet and also create value for the shareholders.
Right. Mr. Misra, if I could get you into the discussion as well. Vedanta has always been a dividend play. How should shareholders think about dividends post the demerger? And will each of the companies continue paying dividends as per the old dividend policy, or will each entity have an independent dividend policy now?
See, the policy that was moved in the VDL board meeting prior to demerger is the same policy minus the caps and the necessity of have a back-to-back dividend declaration. However, it is free to the board directors on the board to decide how much to give and when to give. Second part is as far as company's management is concerned, the ability to give dividend depends upon the ability to generate money and ability to produce results through the form of PAT. That ability has been proven better than even last year, same quarter, when you look at the kind of growth we have posted in this quarter. And this trend continues, there would be enough of cash to serve deleveraging, to serve as dividends, as well as invest in growth Capex. So as far as ability is concerned, there is no change. As far as policy is concerned, there is only cosmetic change. There is no real substantial change to the policy. And hence, rest is in the hands of the directors.
But Mr. Misra, are further asset monetization also being considered, especially for the steel business, which was being considered earlier?
So steel business will have a growth path. So we will be working out that 10 million ton steel plant, which we had promised to during the demerger. So once we do the basic maths right on the drawing paper, then we'll think about the financing options. And no financing option is out of consideration, which includes debt, includes some corporate action. So everything will be under consideration at that point of time.
Right. Mr. Goel, Vedanta has announced a demerger of the surplus real estate assets to now unlock value, and the surplus real estate portfolio to be demerged now comprises of this 2,200 acres of industrial land and about 55,000 square feet of residential commercial properties as well. What is the estimated fair value of these real estate assets?
We did, in fact, they're a very old asset. And in fact, the book value is near zero. In our estimation first cut, the fair market value is in fact slightly over 1,000 crore. The entire demerger process has to undergo the NCLT process. And typically in the Indian context, these demergers via NCLT, the time frame is 9 to 12 months. We do believe post demerger, this company will have a valuation of roughly $3 billion.
Right. Mr. Goel, what is the debt reduction roadmap? That is something that the street is very curious about. And how much debt will remain at Vedanta Limited versus the demerged companies?
So in the current fiscal, we're looking at delivering the Vedanta as a group at about almost 2.2 billion. It's almost 20,000 odd crores. Now, post demerger in the Indian entities, total combined debt is about 6 billion. and out of which roughly 1.2 billion remains in Vedanta Limited, rest in Vedanta Aluminium, the larger chunk, and remainder in 3 small companies. So eventually in the demerger, allocation of debt is in the ratio of the assets and also of each company's debt serving capabilities. So in summary, in the current fiscal, our target is to cut debt we as a group by almost 20,000 crores.
Right. And Mr. Misra, let's also talk about the aluminum business. Your thoughts on where the aluminum prices are headed next, and when will the cost reduction initiative start yielding meaningful results?
No, the cost reduction efforts are continuing as we speak, and this year by end you will see Lanjigarh refinery coming to this capacity of 4 to 4.5 million tons of capacity. We'll see Srijamali bauxite mines starting to operate, the coal mines ramping up. Altogether, also you will see the costs also going downwards from $1,800 towards $1,700 and further downwards. Then the value-added capacities will be added, so that will bring in more realization from the market. So overall, if you look at it, aluminium will post even better results going forward. As if we look at the near-term indications of the prices where they're hitting, there is no indication that the prices are going to go south. They will rather consolidate. And current geopolitical situations, disconnected geographies as far as supply chain is concerned remains. So aluminium prices will hold even in the near 3 to 6 months term.
Mr. Goel, lastly, what will the group's FY27 Capex guidance be, and what will the priority projects across all businesses be, divided between aluminum, zinc, mining and semiconductors?
So pre-demerger, in fact, we gave our guidances, and which covers, in fact, all the 5 companies, including Hindustan Zinc Limited. So our current year Capex guidance is, in fact, almost 23,000 crores, roughly 2.5 billion. It is across the portfolio. Aluminium take a larger chunk, so almost 650 million will be in the aluminium. And again, their Lanjigarh refinery and Vedanta Aluminium is a priority. The second business, of course, is oil and gas. It's about 350 million. Then roughly $500 million, we're looking at zinc side, and the remainder across the portfolio. So depending upon the business maturity, the growth potential, roughly 2.5 billion will be the Capex investment in the current fiscal across all the companies in India.
Right, Mr. Misra, Ajay, thank you both of you for highlighting what exactly are the quarters ahead going to look like, and of course, what transpired in the previous quarter as well. Good speaking with you. But counting down to the market open.